during lunchtime, and thanks Alex for joining us as well. For those of you who don't know, it's actually Alex's birthday today.
That's true. So thanks for all being here.
Yeah. He's joining us, and obviously with the most important people in his life today. So I want to take us back actually to when you were a younger man. This is actually not the first time you've started a company. You last had a business that was aimed at getting folks to stop smoking. You sold the company, you started Qonto, and you had an interesting story, actually. You were trying to raise that first 1.6 million euros, and you told your alma mater, right, in front of a recent keynote, you said that it was one of the hardest things you've done, and you mentioned that as you were raising that 1.6 million, the investors said that it was, quote, crazy. So what were their concerns about the business, and then what did you tell them?
Yeah, well, indeed. So when we started Qonto 8 years ago, everyone was telling my co-founder and I that it would never work, it was a bad idea, no one would be a customer, et cetera, et cetera. So lots of reasons why it would fail, and indeed, raising the seed round, 1.6 million euro 9 years ago now, was pretty hard, and the amount feels very, small today.
Yeah.
But at the time, it was pretty significant, and actually, it was much easier to raise 486 million euro 4 years ago than the 1.6 million euro from the beginning. So, so yeah, I think going into banking and say you want to disrupt, traditional banks felt like a big challenge, big mountain to climb, and so the regulation, the risk, the tech complexity. So a lot of people were seeing that, and what we saw was actually what we went through with the previous company you mentioned. When we thought that opening a bank account, a business bank account, was a pain. Dealing with our bank every day was a pain. Understanding prices was a pain. Trying to get a hold of the customer care at a traditional bank was a pain. And so these are exactly the reasons why we started Qonto, really building the product we would have loved to have ourselves when we built the first company. So we're very sure that, let's say, at least people like us would love, the product if we were able to build it. We're not sure how big, how many customers we would get, but at least that some would really feel the same pain that we had felt, and that would love that service. So we started by, just doing what we'd have loved to have ourselves, and now we're serving 600,000 businesses across Europe.
Yeah, when that first, now you're valued at $5 billion US as well. That first 1.6 million round, I know there's a lot of folks here that are probably raising, or founders here. How many no's do you think you got?
I don't know, we probably got in touch with 20 investors, 25 investors, and probably got, 75% of no's or something.
Yeah.
That's probably the ratio.
Yeah, and it's interesting because the company pitch hasn't changed that much since then until now.
No, it was. I mean, we've strictly executed. If you look at our Series D, not Series D, seed round, but Series D as well. I mean, the seed round deck is almost exactly what we've built. Even the wireframes, the website, the product is very similar. No, it's just people didn't believe that we could disrupt, let's say, business banking the way we did it. Yeah, that's. I think people felt like the market was not a question, the topic was not a question, but more like, was it realistic that we could do it and really change how people use financial services.
Yeah, so you were asked somewhat recently, what keeps you up at night? And I thought this was an interesting response to it. It wasn't like interest rates, it wasn't global geopolitical uprising. You said how to grow even faster across Europe. Why does that keep you up at night?
Well, we obviously, as we became a larger company and now serving the 600,000 customers, 1,600 employees. We've been profitable for 2 years. So there is no kind of, let's say, extreme urgency to meet the next deadline to avoid bankruptcy. But that's exactly the challenge, is that if people feel like, oh, it's okay, and now we have time, and the company, we just can just cruise, that's I think you can die actually slowly, but with that. So that's exactly the opposite that I want all employees to feel. We need to keep on running fast because we're just at the beginning.
Yeah.
There are still lots of big traditional banks serving most of the 26 million SMEs in Europe. Still work with traditional banks. There's still a lot to do, and we need to keep on running fast and executing fast, and doing that already as a slightly larger organization. So how can we remain as agile, efficient, customer centric as possible?
Yeah.
With our scale, with our size, I think that's our main challenge. And so how do we organize small, agile, independent squads or cross-functional teams, as we call them at Qonto, so that a small team of 8, 10 can do a lot. I mean, we started Qonto with 10 people, so you can do a lot with 8, 10 people. And so that's what we're trying to recreate, kind of the startup within a scale-up kind of mentality. That's really, and how you organize and how you design the organization, how you incentivize people, owners, so that they're accountable for what they work on, and they deliver great experience, great product, great service to customers.
It kind of sounds like it's funny, you sound like you're almost scared of not being ambitious.
More scared of not being fast enough.
So last year, your net profits doubled to 144 million euros on revenue that grew 44% to 448.7 million euros.
You know those numbers better than I do. I didn't remember the decimals.
So, around about €500 million in revenue. Where do you think you'll be this year? What are you aiming for 2025?
So we're obviously still growing nicely, similar trend, and again, now we're in this kind of profitable, let's say, side of the of the story. So we want to grow as fast as possible, but still have some good healthy profitability, and reinvest that into hiring, marketing, potentially M&A. We've made 2 deals. Maybe we'll discuss that. And so we want to be having healthy unit economics. That not crazy CAC, working also on LTV, on retention, churn improvement, and so on. And so we have basically the constraint is how can we grow as fast as possible within certain limits of profitability and unit economics. And if we do that, we're happy. And so right now we're in there, and so we're relatively happy.
Yeah, and you're also going for a French banking license, which is quite interesting because there's kind of this almost like this inherent tension, right? Banks are supposed to be risk averse, very controlled in their risk management. You're obviously running like a startup. You're trying to function each of within the organization as a startup as well. So how are you thinking about what happens after you get the banking license, how you organize the company to manage those 2 different competing priorities?
Well, so we've been a regulated company for 7 years now with a European-wide payment institution license. So the big difference when we get that banking license is that we can do more lending, more savings, more investment products mostly. But it's very similar in terms of, let's say, compliance and control that we have today. We already have pretty strict, the same as banks, regulation in terms of KYC, know your customer, anti-money laundering, and all these topics are everyday topics for us, so they will remain the same. We'll have a few more topics like credit risk. Today we've been doing a bit of lending or financing, but for relatively limited amounts. We've financed about 50 million euros so far, so still pretty limited. We'll do much more when we get this banking license. But again, compliance, we have to be compliant by design. So it's already in our, on the onboarding team, on the payments team, on the cards team, on all our teams. I mean, compliance is their everyday, topic. And of course, our game is how do we do compliant product by definition that is faster, easier, better than what traditional banks are doing. And of course, we're using technology a lot for that. And we've built our own core banking system, so the IT infrastructure that manages all the transactions. We've built our own card processor, so all the card transactions that are made by our cardholders are processed internally, so we get better acceptance rates, better answer time than if we had done that with an outsourced partner. And so we're also choosing the core infrastructure bricks that we're building. Sometimes it takes time, like the core banking system took 18 months, the card processor also 18 months, so it's a pretty significant investment, but we do that to build for the long term the best service for our customers.
Right, basically it's all in-house now, you have more control over it, right? It's not an older core banking system.
Yeah, these two are in-house. Some things are, we do with partners, and depends a bit as we develop. On financing, we've been working with partners for a long time. We're also now building our internal capabilities, and very much, following or being, pulled by our customer feedback. We, as most companies, but I think we take it even more seriously. Yeah. All the feedbacks, all the comments, whether it's on a Trustpilot rating or to our customer care team or to our sales team, we gather all these feedback and we kind of triage, we filter them, and then we work on the roadmap basically based on all of that, and really taking care of all these little details that make wow moments for our customers, from the the card packaging to the onboarding flow to the logo to whatever. Like all these things are really details that matter in the end. And so we go into that very level of detail with our customers.
Yeah. Well, so let's talk about like the inescapable theme of like the last 3 years, AI, right? Where are you? You guys are using AI for things. You're talking about in compliance as well. But where are you seeing kind of the most effect, the most impact from really implementing that technology?
Well, everywhere. I think that's the quick answer. No, but I mean, of course, customer care is one obvious topic. More than 50%, 54 is the number now. 54% of our chat interactions are AI handled, so fully automated. And what's really interesting to us is that the customer satisfaction for those interactions is as high as for the human interactions.
And this is like voice, or is it chat?
It's chat. It's chat. We do it for chat. We started for email. We don't do it yet for voice, but we will do it definitely. So that's one big topic. And by the way, for the customer care, 54% on the chat is fully automated. But the part that is not fully automated, of course, our teams, our agents are also using AI to make their work more efficient. So even if it's not fully automated, it's already using AI. Of course, for lots of internal processes. Of course, our engineering team is using AI to write or to check or to challenge their code and so on. But also we're using AI for customer features. So we're using AI for instance, for cash flow forecasts. Long story short, we're using AI to help our customers have a better view of how their cash flow will evolve over time based on their history, based on what their plan is about hiring, sales, etc. That connect the dots basically. And down the line, when we become a bank and we have more financing capabilities, we'll of course use that also to say, okay, it looks like you have some cash flow needs in 3 months from now. Would you want us to offer you this product, and so on and so on. And so in a much more automated and smart way, so that each customer gets the product they need when they need it, basically.
Yeah. How about the other side too, right? Where are you seeing limitations of the AI use? Because especially when we're talking about banking and we're talking about fintech, compliance comes into play. Data privacy comes into play, especially in Europe.
Well, yeah, of course. Those two topics you mentioned, data privacy, compliance, definitely key. So For instance, for the chat today, we're only using AI to answer to customers with, let's say, public information. We're starting to use AI to also answer our customers. So like, how do I reset my PIN or whatever? And we answer, okay, go here, click here, whatever, and with screenshots, and that's fully automated. Then if customer has a precise question on their account history and they need more details, then we're going to the stage where we can actually give customers some more details about their personal situation. So what is this 35 euro transfer that I made last week that I don't remember, and maybe it's fraud or whatever. And now our AI tool is also able to use that, let's say, personal data to answer a customer. Of course, after having checked that this is the right customer we're talking to and so on. And the last step will be when AI can also, we're not there yet, can also perform actions like, blocking an account or doing some of these things that are, of course, sensitive actions that only our team does today. But that's probably the next step. So it's going to go step by step. To be fair, there are also mistakes with humans. So it's not like we need to aim for 100% perfect with AI. But we do both, and I think what works really well again is like using AI as an enabler for teams, and that's where we get the best results. I mean, same for code, and same for lots of things. We've been using AI very smartly, actually on fraud detection, actually also used by our team. So our team is using AI to simulate fraudsters trying to do stuff, and
like phishing attacks, like you'll have them.
Yeah, those kind of things.
Yeah. What about the other kind of tech, I think, within fintech that's getting a lot of buzz right now? Stablecoins. Do you see a use case for your company? Have you tested it?
We're not testing it yet. We're definitely open to all new technologies. I think it would be a bit stupid not to be. We're very much, again, pulled by our customers' asks and feedback. This is not very much a key theme for them yet. I mean, we're really focusing on relatively small to medium businesses, but businesses, not individuals, and they're, let's say, serious in their asks and want to have like the basic stuff to make their key core business and everyday business faster, smoother, better. And so they're much more, at least today, into what we offer them in terms of invoicing, bookkeeping, spend and expense management for their teams, the right integrations with accounting, all these things that are so painful and are so critical to any small business. Having smooth international payments, FX, all of that. Lending, of course, we discussed, and we're getting stronger on that. So this is still very much the focus for us.
Right.
But stable coins, we're definitely looking into it, and it might come at some point, but not short term.
Right. No, basically your customers aren't your customers are not asking to buy tomatoes in stable coins at the moment.
No.
Yeah.
Not yet.
Not yet. So you have expanded. You started out actually with France, your core market, Germany, Italy, and Spain. You have since expanded into Austria, Belgium, Netherlands, Portugal. What's your playbook for expansion?
Well, the playbook for expansion was actually from day one. We wanted to be global, or let's say starting with European company, and so from the name Qonto, that means account in Esperanto, to the domain we used in the first place, Qonto.eu, to the whole internal, playbook and culture and knowledge that was, I think for the first 2 or 3 years, we only had customers in France. They were only speaking, we were only speaking French with our customers, but everything inside the company was in English. The first, I would say, maybe 7 or 8 people on the team were French, but we started speaking English, from day one with all, with teams. So that I think the eighth person we hired was Ukrainian back-end engineer who's still with us, Dmitry, and he didn't speak French at the time. So that was very much the beginning. So
wait, so are you guys on Slack right now? And
yeah. So
the main language is English.
Yeah, so everything is in English. So that helped for the both, of course, European expansion, but also hiring lots of non-European, non-French, but also non-European talents. Today, we have 80 nationalities on the team, so very, very diverse and team in terms of nationalities and languages. And then to go back to your question, the playbook is, we use the one tech infrastructure that has been built to be able to scale across Europe. The payment system, of course, we're leveraging the SEPA network and SEPA systems, which is very European. Today, we're in these 8 markets in the Euro area, which makes it very easy to scale. Maybe one day we'll also come to Finland, and so the core banking system is the same. The card processor, all of these things are similar. So I would say 80% of the product, 80% of the service is the same across all our markets. We're of course leveraging the EU-wide license that we have today, the payments license. It would be the same with the banking license. What is different, of course, is the language. That's the challenge, also the beauty probably of Europe. But we're also going into so language is different. IBANs, we get local IBANs in the different markets we operate.
Right, there are some regulatory differences.
So there are a few regulatory differences indeed. Local payments. SEPA is the norm, but for tax payments, you have some differences. So in Italy, there's a protocol called F24 in Italian, which is basically to pay your taxes in Italy, which is only Italian. So we go to that level of detail. We have accounting integrations, which accountants use different software across the different markets. The number one accounting software in Germany is called Datev. It's very, very big in Germany and Austria, actually, but it's not in other markets. So, of course, when we went to Germany, we integrated, and we have now a very deep and robust integration with Datev, and with that, with all the markets where we launched. So, in Netherlands, where we launched recently, we're working on getting the local IBAN, on getting Ideal, which is a local payment scheme, and so we're kind of local, if you will, or Euro local, whatever you call it. So the bulk of what we do is very much the same.
Yeah.
But to really be helpful on a daily basis to these small businesses, you need to go and do this kind of last mile, a bit like last mile delivery, which is local payments, local accounting integrations, local software integrations, and also company creation. We're very strong on company creation. We help entrepreneurs from the very first day when they start their company, and the way you incorporate a company tend to be slightly different from one market to the other. So we're also localizing that quite a bit with notaries, etc.
So you guys have basically been you're one of the largest companies in France, one of the largest startups in France, I should say, and you have been doing kind of tender offers, right? Like last year, this year, you said that you've been talking to folks about a tender offer. Is this going to be like a yearly thing from now on? Like every December, every November, I'll call you and you'll be like, I'm doing a tender offer, and like you're just never going to IPO. You
mean like Christmas is every year kind of thing?
Yeah, Christmas every single, on your birthday in particular.
No, well, the plan is to offer indeed liquidity to early investors and employees on a regular basis. We want to keep on growing. I see the Stripe logo here. I think Stripe is a very good example of becoming a very, very big company, but while staying private. And actually, Stripe is, I think, doing these tender offers every year,
right.
Beginning of the year. We will be less strict about, I think, the calendar, but probably every 18 months or so. We'd love to be able to do that. Will depend a bit on how we do and how the banking license, the timing. We're also busy with other stuff, but I think offering liquidity on a regular basis to early investors, to employees, is really, really great. I mean, we're super happy that most of our employees have equity and they can see the real value of that. I think one problem or one challenge in Europe is that too few companies have had that real money aspect to employees that had stock options, and so I think we're lucky to have that, and we want to do much more of that in the future.
Okay, sounds good. I'll call you in 18 months. Thank you, everybody, for joining us today, and thanks, Alex.
Thanks a lot.
I think we can go this way.
This way?